So welcome to the presentation. Today we're gonna talk about sustainable investing in the Investment Academy. What are sustainable investments and what makes them sustainable, of course. Here are today's topics. So at first we're going to take a look at what sustainability actually is and how can we adopt it when managing a company. So what is sustainable management? And of course, how are sustainable investments defined? So what actually is a sustainable investment? And we're going to look into examples of sustainable companies, and we're going to take a look at some stock performance comparisons. So we're going to see, do they actually have the potential to perform better when we're talking about stock? And at the end, we will take a look at some relevant players in the market. If you're interested in getting into that area in regard of your potential job or internships or just personal interest, I will have some names for you at the end. So first, in general, I have a definition for you for sustainability. Sustainable development is development that meets the needs of the present without compromising the ability of future generations to meet their own needs. You may have heard this definition or a similar one. There are many outside. So sustainability is really a thing that is kind of hard to define because there's not really right or wrong when talking about sustainability, but you could summarize it with a moderate use of our natural resources. So in the end, you know what it is about, probably because you're also studying at a university with a CBS that is focusing on sustainability and CSR too. So overall, it is quite important to talk about sustainability because, for example, there are still 700 million people living in poverty today, meaning they have less than $1.90 per person per day to live. For all those reasons, the United Nations created the 17 SDGs, the Social Development Goals. On the bottom left, you can see them. They include all kinds of things that have to be met in order to create a sustainable development, meaning no poverty, more education, safe working conditions, protecting animals and our natural resources, of course. So the UN created these goals in order to reach them by 2030. And we have many sub-targets and indicators for all these goals, and they're trying to measure them worldwide. And yeah, we will see how that can help for a more sustainable development. In general, sustainability is basically built on three pillars, which are ecology, economy, and social. So you may wonder why economy is in there. Some people forget that being profitable is also a necessary part of sustainability. So you cannot have a working economy that will last long if it's not generating profit or to be able to stay alive and keep going. So economy is quite an important part of sustainability as well. Talking about sustainable management or also corporate social responsibility, in short CSR, you probably have heard this term. I mean, it's very predominant at CBS as well, or in the news, wherever. It's a very prevalent topic for all of us. In general, we can divide sustainable companies into two parties. On the left side, we have the social entrepreneurs or green tech companies, and on the right side, we have companies without a social business model. So to be sustainable or sustainably managed, companies do not necessarily need a social business model. First of all, sustainability has to be integrated into the overall corporate strategy. So it's really not a thing of a particular department or person. It's really a thing that has to be integrated all over the company to be able to trickle down. And CSR can be defined as the company's commitment to minimizing or eliminating any harmful effects and maximizing its long-run beneficial impact on society. So things to watch regarding CSR, especially for people managing a company, are environmental and social impact of the supply chains, because those multinational companies, of course, have supply chains that go through various countries and therefore have to obey to multiple laws, regulations, and different standards of environmental conditions or social conditions, working conditions, health conditions, level of pay. So there are a lot of things to regard in the supply chain aspect, but also, of course, production facilities. You may have heard about scandals regarding production plants where people, regarding child labor, for example. Distribution, daily operations in general, like, for example, how much waste do you produce? And of course, also in advertising, CSR plays a role. For example, you could make a decision on whether you want to produce physical flyers for a company to advertise, or if you just want to do it online, saving paper, for example. This is just a small example for how CSR works in practical terms. What does sustainable management create? So it basically creates a cycle of transparency. On the left side, we can see that the more transparency we have, which is given for a sustainable company, the more accountability we have. So a company is more credible for what it does, and therefore corruption will go down. Of course, when it obeys to all the regulations and laws in multiple nations, corruption will go down, and therefore reputation and trust, especially regarding the potential customer, will go up again. And all this ends in a cycle that all stakeholders will benefit from, especially in the long run, right? Because when you have customers that trust you and that see you have good reputation, your stand for sustainable development, then they are more likely to buy your product or even pay a higher price in comparison to the competitor's product. And on the right side, we can see the multiple stakeholders a company has and how they benefit from CSR or sustainable management. So shareholders will benefit from possible performance advantages, which we will take a look at later, and maybe lower risk regarding their stock. Suppliers will benefit from human rights alignment and lower emissions along the supply chain. Customers will development. They have the feeling of being a part of the sustainable development that company fosters. And employees, of course, they benefit from fair wages, good working conditions, and very important, especially nowadays, even more positive identification with the employer. How to measure sustainability? This is basically the most challenging thing regarding sustainable investments, because measuring sustainability is very hard. You have multiple questions that have to be answered. For example, what do you want to measure? Can it be manipulated? Can it be compared well? Is it possible to put it into numbers in general, or are long-run effects included? On the right side, we can see some things that you actually can measure in order to put a number to sustainability. So we have carbon emissions, of course, energy usage, water usage, the waste a company creates, the labor conditions, are they aligned with the regulations, and projects supported, social projects, for example, in the direct environment of the company, in the city, in the country. And to improve all those things, improve measurement of sustainability, we have to have strict ESG criteria. We need to avoid harmful industries, for example, weapon, gambling, or tobacco industry. And we have to create those sustainability indices, which we will talk about later. And in general, the more metrics we have, the less we will have greenwashing, right? Greenwashing is, of course, when a company is preventing to be sustainable, but actually is not, just uses it for advertising to create a false image. And the better we can track and measure sustainability, the less this will happen. And of course, we have to improve ESG reporting, because for now, ESG reporting is mostly voluntarily. Many companies already do it, but still there has to be improvement, especially regarding numbers. So what are sustainable investments and what are they actually not? I collected some terms that you may know or may have heard or read in the last years, and essentially a sustainable investment is just an investment in a sustainable company. But there are multiple terms floating around, so I want to put them into order just a little bit. We have socially responsible investments, and by the way, all the terms that are in the blue bubble are sustainable investments, and of course the red one is not. So we have SRI, socially responsible investments. We have ethical investments, ESG investments, of course meaning environmental, social, and governance. We have impact investing, we have green bonds, which are not stocks, but bonds, of course. We have thematic investing or value-based investing, for example. And all the opposite companies that are not in their sustainable criteria are called sin stocks. For example, company Nestle, for example, they're criticized for not being sustainable at all. Many people that do sustainable investing would call them a sin stock. What is the track record of sustainable investing? So we go a little bit into the history, how it developed. I would like to do questions afterwards. Is that possible for you? So afterwards we can have a little bit of a discussion round and ask some questions. So please keep in mind what you want to ask, and then we will talk about it later when we're not recording the session anymore. At first, as early as in the 1920s, the negative screening has been used. Negative screening means that you avoid any harmful industries, as I mentioned earlier, for example, weapons, gambling, and tobacco. Institutional investors are really the drivers of sustainable investments because they have the most money to invest. So whatever they choose, many private investors will follow, and they already did so in the last decades regarding sustainable investing. The implementation of sustainability factors is vital for the envisioned outcome. So over the years, more and more factors have been created to measure sustainability, and they can actually create a double or even triple bottom line. That means that they have 2 or even 3 positive effects by doing well socially and environmentally, by lowering risk because of high standards of governance, right? Because when you have a closer eye on what the company actually does and what the management does, then you can create a more sustainable company. And of course, the third thing is creating a possible profit gain over non-sustainable companies. The focus went from positive screening to analyzing soft factors. Here we have a lot of them in the sustainability reports of the companies, and it's really hard to put them into numbers, but this has been happening more in the last years. But still, the biggest issue for sustainable investments is measurement and the modeling of factors. So reporting is more or less voluntary, as I mentioned, and it's not based on numbers most of the time. So only a small part is put in numbers by the companies themselves. So there have to be institutions, there have to be asset managers or research companies that are actually doing the research and putting numbers next to sustainability and trying to measure it in order to be able to use it to create those sustainability or ESG indices or ETFs that investors are able to invest in, just like us. And much needed is, of course, more disclosure of ESG data and especially more transparency regarding supply chains and production, because companies often don't count that to themselves, right? When a company has production facilities, but they are offshore in another country, and they will most likely not include them in their personal sustainability report. But of course, they do belong to that company. Now we're talking about stewardship or ownership 2.0. Stewardship is the relation between a traded company and the investors. And ownership 2.0 is basically an evolved standard of stewardship. It means that nowadays investors, especially large institutional investors, have more and more influence and are focusing on the relation between themselves and the company they invest in. Because they are so large, those institutional investors, they can influence the company's management in order to make it more sustainable, in order to improve strategy, in order to improve supply chains, for example. So this is what Ownership 2.0 means. In regard to this, in 2006, the UN Principles for Responsible Investment were introduced by the United Nations, and with this, many institutional investors declared to use environmental, social, and corporate governance factors in their investment decisions. And in 2014, a new sustainability reporting framework was introduced to make sustainability reporting of the companies more transparent and have common standards for all the companies. So still, this is not quite given, but it did improve over the years. What kinds of sustainable investments do we actually have? Here on the left, I have a chart from KPMG from this year. They made a survey regarding sustainable investments. And most of the sustainable investments, so the indices which the ETFs are created from, incorporate sustainability integration, meaning they try to put this into numbers and match it with their financial numbers, and therefore decide whether a company is a good sustainable investment or not. Also, negative screening is used. Negative screening is basically the simplest way of doing it, because you just avoid some industries or some companies that are not regarded as sustainable. And then you have some others like shareholder engagement, which is of course stewardship and ownership 2.0, so the 31%. And then you have some other terms we had earlier in this presentation. On the right side, you can see some sustainable indices that were created over the years. For example, the MSCI World SRI Index, the MSCI KLD 400, which is one of the oldest sustainability indices, the FTSE4Good Global Index, Global Challenges Index, and since this year, the DAX ESG 50, which is a sustainability index created from DAX companies, but not just the DAX 30, but even more, and they put together 50 companies. So they are possible investments for all of us private investors, of course, because they collect a lot of companies that are supposed to be sustainable. But often I have to mention that those sustainability indices are criticized for not using very strict criteria, but just a best-in-class approach. Best-in-class means that they collect the most sustainable companies from certain industries. So, for example, they divide it into 30 industries and then use the best of each industry in regard to their sustainability metrics. But since in some industries there are just no companies that are as sustainable as others, this can be regarded as not always the right approach. And often they consist of similar companies like their parent indices. So in the DAX ESG 50, you will see a lot of companies that are also included in the regular DAX 30. So how can you personally determine a sustainable company to invest in? If you do not want to invest in an ETF from one of those indices, for example, that collects all the companies for you, you can first determine your investment focus, because you cannot look at all the companies that are out there. So you have to have some kind of a focus. It could be one industry, for example, automobile industry, energy sector. You could look at social entrepreneurs. Or a specific country, for example, if you want to invest in Germany, or all kinds of investment focus is possible, but there has to be a focus to narrow down all the companies, because of course you cannot take a look at all of them. And then of course you have to analyze the company's financials, because that is really what makes your investment good, if you've done a good job here. Of course, not all of us can analyze a company's financials already. You may or may not learn it during your studies, But if you want to choose a single company by yourself, that is most likely a necessary part to make a good long-term investment. And then as a third step, you can check the sustainability of the company by reading the sustainability report as a first source maybe, and of course checking news and the company's history. Have there been any scandals? How does the supply chain look? In regard of supply chain and production, you can basically do a lot of research because it's kind of hard to find sometimes. Of course, the companies try to hide if they don't match sustainability criteria in some areas. And then it's always important to compare actions and metrics, because if you have a number or a sentence, for example, sometimes you just don't know what it means without comparing it to another company from the same industry. You just don't know if it's good or not because it's just a random number. So comparing is always very good. And of course, using industry averages for this can really help. So here I collected some performance comparisons, so you can see how sustainable investments did in comparison to less sustainable investments over the last years. On the upper left side, we have the KLD 400, one of the oldest sustainability indices, in comparison to the S&P 500, which is the huge US index that you may know. And as you can see, it looks very similar, but at some point earlier in the 90s, the KLD 400 just started to have a better performance and then went off. And of course, there are a lot of similar companies in there. This is why you can see a similar chart. But over the years, it really paid out to be invested in the KLD 400 over the S&P 500. On the bottom left side, you can see the same with the MSCI World and the MSCI World SRI, so socially responsible investment. They look very similar too, but you can see that at the end, you have quite a huge difference in regard of the long-term performance. Also, we have a comparison of the MSCI World with the sustainability index based on Ökom Research Ratings, which is one of the research companies. And you can see that they almost doubled the performance of the MSCI World over 10 years, from 2008 until 2018. And also quite interesting, you can see that on the left side in this chart, you can see 2008, 2009, where you have the financial crisis. And you can see that the lowest point of the sustainability index was much higher. It just didn't suffer that much from the financial crisis as the MSCI World did. And on the bottom right, you can see that Goldman Sachs did a statistic in 2012 in which they said that stronger ESG scores correlate into higher returns. So we also have some proof that they actually do correlate positively. Here are some examples of relevant institutions that you can have a look at if you're interested in this area, whether it's for a potential job or internship, or it's just to check out the websites, what they actually do. We have some rating agencies or consulting agencies, for example, Sustainalytics, and they do a lot of the sustainability measurement. Then we have ISS, which was formerly known as Ökom Research. Then we have EMAG, and we have Metrics, which is the consultancy agency from Patrick Bungard and René Schmidt-Peter, our two professors here at CBS. They have their own sustainability consulting agency and do a lot of projects in huge German companies. So if you're interested in this, then I would advise you to approach them. They have some really interesting information. They wrote some interesting books about sustainability and sustainable management. So yeah, some really interesting people and sources if you're interested in this matter. Then on the right side, we have some sustainable banks. Alexander already mentioned at the beginning that we have a guest speaker from the GLS Bank in the near future. And we also have Triodos Bank and ING as some of the most sustainable banks that are out there worldwide. Then the asset managers, which are companies that offer sustainable investments for their customers, whether they are institutional or private clients. And those are NN Investment Partners, Aquila Capital, which Alexander knows very well as well, and Robeco, the investment engineers. And on the left side, I just have, as an example, 3 companies that are rated as very sustainable over many years. And those are Osram, they make light bulbs, and Ørsted and Cisco, which is an American software company. So just so you have some examples of relevant institutions in the field of sustainable investing. Then I collected some potentially interesting sources for you. I have a sustainability report from Siemens from 2019, the KPMG study that I got some information from, and some sustainability measurements, some ratings, and some relevant terms regarding sustainability and sustainable investments on the bottom. Okay, so finally, I would like to get into the discussion part, but first I will try to answer your question if it's still there, and I think we could stop the recording from this point on.